Hi, this is tax attorney Anthony Parent of IRS Medic, and in this video I'm going to be talking about soft, quiet, or silent disclosures and some of the hidden traps of not disclosing offshore accounts properly with the IRS. Now here's the truth. In my opinion, the Offshore Voluntary Disclosure Initiative, the 2012, this is a little harsh. It seems a little bit like overkill to me for certain people, because at this point what we're really seeing is a lot of people who did not have a particular intent to defraud the United States just got caught up in some of the complicated filings of the IRS. And so going back 8 years and even paying a lower 5% penalty, and of course adding in attorney fees, it seems a little much. Unfortunately, we don't get to set the rules. We only can convey what the law is and how the IRS is enforcing things. And that's really what I'm trying to do in this video. So I know most people call us, email us, and they ask if they could do a soft disclosure, and as a way to not have to go through the entire OVDI process. And they want to know, is soft disclosure, can they avoid criminal charges if they do a soft disclosure? And to that, I think we have to start kind of explaining, well, what kind of soft disclosure do you mean? Is it a soft disclosure to avoid detection of the IRS? Because if that's the case, your soft disclosure would include amended returns with all the previously unreported income, but not including yes on Schedule B and not filing FBARs, because if you did do such a quote unquote soft disclosure, you're completely alerting the IRS to the fact that you had these previously unfiled returns, and that's really not going to help you out too much because the IRS will find out about those and assess some pretty hefty penalties. So if you do a disclosure where you're amending returns and not indicating that you have unreported income on Schedule B, and if you're not filing then you're not filing FBARs, then absolutely you are subject to criminal charges, and it's clear as a bell. There's a recent case, U.S. Versus Schiavo, and I think I'm missing a C right there, and it's a recent case. Where the taxpayer did a soft disclosure, and the IRS found out he knew better, tried it anyway, and he agreed. I think that case he agreed to a plea bargain, and he agreed to a penalty structure. Now, on the other hand, if you're trying to do a soft disclosure where there's no attempt to avoid detection, well, that would be you're filing your amended returns with unreported income, and you're including a yes on Schedule B, and you're including all your previously unfiled FBARs. Well, in that case, my answer, I'm going to say probably not. It's going to be hard for the Department of Justice to bring any criminal charges against you in that case. But well, I mean, I'm not going to give any guarantees. But one thing we can tell you is civilly, you're exposing yourself to absolutely catastrophic penalties, such as the 75% civil fraud penalty, and that's calculated on your reported income. But truly, that's really not the big deal. The big deal is the FBAR penalty. Okay, and this is what you're going to be subject to if you don't use the 2012 OVDI program. And an FBAR penalty is 50% of the account value. Okay, so here's a big distinction. It's not calculated on the taxes that should have been paid. It really has nothing to do with that. In fact, the account could have lost money, and still the FBAR could be assessed. And here's the other crippling fact. The FBAR penalty can be assessed more than once. It could be assessed for every year the FBAR wasn't filed. And so if you can get 6 FBARs for 6 years that weren't filed, and so if we multiply 6 by half the account value, we end up with something like 3 times the entire net worth of your foreign accounts. So when we say the FBAR penalties can exceed your entire net worth, we're not making this up. It's absolutely true. Um, And so that's why if you're going to do a soft disclosure, you really have to know if you're going to do a soft disclosure where you're trying to avoid detection, that's criminal. And if you do a soft disclosure where you're not trying to avoid detection, you're setting yourself up for catastrophic penalties. And one other note is that I know there's a lot of attorney CPAs and financial planners who are advising their clients to do a soft disclosure. And I hope some of them are watching this right now because here's the thing, just think about it. Just think about it. If you're taking money from someone to advise non-compliance with a law, you could put your license at risk, and you're setting yourself up for a potential malpractice claim, um, and you could put yourself in jeopardy for indictment for conspiracy. So really, the IRS means what it says. It says do not advise clients to do a soft disclosure. So please take that advice. Now there is one exception. Okay, and the IRS is clear about this as well, where you do not need to do an OVDI, and it's not a soft disclosure. It's just where you have no taxes due. For instance, you did report all the income, and maybe you didn't click say yes on Schedule B, and you didn't file the FBARs. Okay, in that case, you do not need to do an OVDI. And what we do for our clients in that case is we prepare all the missing returns, and we prepare a penalty abatement letter. So that the IRS is aware and that the client has something on an attorney's letterhead to say, yes, we were aware of the OVDI requirement. However, we fall into this exception where OVDI is not required. It gives them something to hang their hat on. Now, if you have more questions about the 2012 OVDI program, click on the link below to sign up for our free report that's loaded with just great information that goes a little bit more. Or if you want to talk now, give a call. And one of our attorneys will talk to you about whether or not if you do need to do the OVDI or if you have a simple FBAR issue. This is Anthony Parent of IRS Medic, and I thank you for watching.